Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, August 7th. Today, another day without big economic data, so we are focusing again and again and again on the technical analysis on the Nasdaq, on price action. Price action is king, and more in the days in which we don't have any economic data, any catalyst. We have to really pay attention to those levels that are pretty visual. Visual levels are what everyone's watching. Don't follow those intricate levels that you are following with your indicators. No, markets are so visual that gaps, wicks, and big momentum imbalances are what rules the market in these uncertain situations with volatility. So let me just go first review the NBA 30-year mortgage, and then we are going to go to the charts to really see what are those visuals that I'm talking about. NBA 30-year mortgage is now dropping to 6.55, and that's sparking 6.9% of applications in August, and refinance reaching the 600 level. In order to see some context, the mortgage rate, I told you a couple of days ago that we are now at 6.5, which is basically the level at which we are starting to see higher and higher in 2023. So we see the big high, the big rejection, the big low, and then we were starting to go a little bit higher concerning, but now we are starting to drop. So the trend, let me just put the 6.5 there. The trend is certainly lower, and we are at good levels. So what Fed is doing, it's working. What the interest rates going higher are working. They are reducing the labor market. They are reducing and cooling down prices, and these mortgage rates and the other funds rates are going lower because they are working, because the higher interest rates are going to be lower in the short term, and banks are, all the institutions are adapting to that. So this is a consequence of what the Fed is doing, and we are certainly going to see more and more of this, because I think right now what is worrying the market is not inflation, it's earnings, and it's also growth. Because when the Fed is cooling down so much the economy, the market, which what they look ultimately is growth, they are quite concerned, scratching their heads thinking, are we going to see growth in our stocks? That's what the market wants. So we are going to really see, we are going to review the earnings real quick, because yesterday at close we got SMCI, Supermicro, we got Rivian, and we got Airbnb. And today we got retails, Shopify, we got Walt Disney, and after the close we are going to see Robinhood for those that are trading in that. But I'm going to focus on these 5 because SMCI announces 10-for-1 stock split, but this is not enough, because these 10-to-1 stock splits are really a double-edged sword. So Search are plunging 30% because basically they are missing big time on earnings. 6.25 versus 8.07, and revenue barely hit. So basically gross margin dropped to 11% from 17% on the third quarter, and this is quite concerning. The 10-to-1 stock split is not enough. It's just a trick for shareholders to hold and for people to attract more buyers. But I think ultimately what we are seeing is a big earnings miss on SMCI. Rivian tops Wall Street's second quarter expectations with cost cuts. That is good, because cutting costs it's good for the efficiency and the performance of the business. And we are seeing a miss in the APS and barely a hit on the revenue, but at least they are cutting costs in this environment. Rivian, I think, is pushing higher. Airbnb is dropping 14% because another company that warns of slowing US demand. Demand is what is fueling growth in the market. So if these stocks, these businesses already expect in the forecast that the US demand is going to slow down, markets are going to adjust price. But some of them, like Airbnb, are warning about this, but some others, like Shopify, reap 22% because they are topping expectations and they are seeing that their consumer base is basically pretty strong. 26 cents versus 20 cents expected on the EPS, and revenue also beat, jumped 22% during the quarter to 67 billion. So even though Amazon, Etsy, Wayfair are all saying consumers continue to be cautious, these guys, Shopify, is really doing really good. And finally, Disney beats estimates as the combined streaming service turns into profit. EPS 139, big EPS beat, and revenue 2316 versus 23. The operating income increased 19%. And the combined streaming business took an operating profit of 47 billion compared with a loss of 500 million in the same quarter. So that's the result of direct consumer streaming unit reporting a loss of only 19 million. So Disney is starting to bottom up in these streaming services, but again, slowing demand is what the Fed wants. Some of these stocks are reporting that, some others are really saying our consumer base is strong. So it's a mixed sentiment. And at the end of the day, we really need to follow price action. And price action right now, I warn you about this ascending triangle into the gap that we got. This is the gap that I was mentioning before. This is the visual that everyone's watching this gap. So if we push, retest, and continue, that is bullish. If we try to go higher, find sellers, and then came again into balance, into the range, that's basically pretty bad, because the outlook would be everyone will be watching this level down here and this trend line, and we can turn into a ascending triangle. We can turn that into a bear flag, breaking down again towards 18,000 and below. So let me just put my marks. We have certainly a lot of volume here. Let me just adjust. We have a lot of volume at 12% from all-time highs, and we have two really big 1 hour red candles. So as you can see, I already have this as a trend line. I'm pretty concerned about the fact that we are failing to resolve this gap. We basically gap filled. And when you fill the gap, fill that imbalance, and you reject that gap close, that is certainly bearish. In this case, in which the gap was to the upside. So we go to the 30-minute, and we can see that we were in a range. We tried with a higher low to resolve. So that was the trend that I was watching during the overnight. And we just range bound into that level and a rejection. We didn't find any buyers. Slowing down to the 15-minute, you can see the pressure that was being applied to 18,500, and finally it got rejected. We have a bearish fair value gap in here, and we are now fighting in these two bullish fair value gaps. But certainly I wouldn't touch this until low of day, which is basically low with pre-market, sorry. So 5-minute range, pre-market low is down here. We are resolving this trend line. Let me just remove that. This is the 1 hour one. This is the one that is crushing every liquidity. Be careful with this if you are short, because perhaps at this level we are going to see a bounce. But as you can see, we tried a couple of times, but we got rejected, and then we starting to see sellers piling in. My trade today was certainly, I was pretty cautious because during the overnight we were just climbing higher and higher, and this was a nice move that I couldn't take opportunity. I was looking yesterday's high at 18,400s, then we pulled back into the London Open. We started to see what we usually see. We see Europe buying the US markets, and then at the open, we usually retrace a lot of that movement. So taking the opportunity to see the gap close, and also we have yesterday's high and the gap close up here. My target was certainly that zone, but due to the volatility that we got these days, I'm just being quite conservative. The pullback, this blue dot line is last week low, which we are now finding support of. And then, as always, the inverse, the bullish fair value gap, a push higher. At this point, I was just saying, okay, I missed the opportunity. I missed my setup. I didn't jump in, because if you jump and lose to FOMO, sometimes you just got wrecked into a pullback. So I was waiting exactly for this. But not on this, look at this. This was not into the bullish fair value gap. This was not in here, which is the bullish gap. It was just tapping into the inverse. And I want to tap the price action to tap into the bullish. So if we remove the inverse fair value gap that I usually have as a reference, just playing with the bullish fair value gap, we can see that it tapped perfectly on this candle. I was just adjusting. This already tapped here. I then waited another minute. I adjusted my entry here, and I triggered long at this candle with the entry and the low in the low of the candle that created the bullish fair value gap. That was 13%, so 13 points, certainly quite a lot of a low risk in this environment with a lot of volatility. And that was 3.5, 1 to 3.5 risk versus reward for 47 points on this, basically these relative equal highs. I was hesitating to just let it go to here into the open. And I was just saying, I'm going to play it safe. I'm going to just take my profits and run. It went straight into the gap close, and then chop, 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 a lot of chop, not only the Nasdaq, also the ES. The problem with the ES was that the gap close was up here. So we continue pushing higher to close the gap also on the ES. And it made the situation even worse for longs up here, because while the ES was trying to close the gap, the Nasdaq was just doing this kind of shit, trapping longs into the downside. So as you can see, I have this. I was trying to play some shorts, but I was just saying, okay, no, there's no way. Because then you find this, you find some buyers, because why not? And then you get squeezed. So today for the shorts was quite clear. I don't know why. I don't know where should I enter, or would have I entered. But certainly, in my opinion, it was pretty clear that we were just building pressure to the downside up here, and we were just going to dump a lot of people down here. So now for the levels, if you want to still play the longs, if we go to the 30-minute chart, we can see, or the 15, in which I already have a couple of, these are no longer valid. These two are gone. We took the relative equal lows down here. If you go to the 1 minute, that was clearly a target. So we got those here. And if we go to the 15, we only have this big imbalance since the overnight. if we apply the consequent encroachment in the 50% of the box, that's 18,200, 225. But, and we have also that liquidity, sell side liquidity down here. If you want to play some longs, I would say this is a pretty decent zone if you want to play the manipulation move into a bounce. Now, I can see this market going straight to pre-market low because on the trend line, we are below the trend line. We are breaking down the 1 hour structure. And that's what is making me think about being bearish, or at least not being prepared for taking more longs. We have liquidity up here, and I mean the 1 hour is it's quite clear. It's even clearer than low time frame. We were trying to build, we failed. We have a last opportunity here on the 15-minute, but we might just reject here on the last week low and then continue lower. Settlement is right here. We can continue lower, take pre-market low, and then see what happens. If we continue to just destroy all this liquidity, or we just find some more buyers at 18,000, because 18,000 is right here, right here. We have liquidity down here. So certainly it's pretty difficult. I don't know where we are going to find some kind of support. That's why if you try some setups, you have to have a lot of risk management in place, because then if not, you may have a swing like this of 500 points and get destroyed. Concerning things that make me think again about what is happening is that this week was so bullish and we are hesitating right here on the daily chart. That makes me think that perhaps we are going to see more downside. Dollar, it's certainly bouncing from key levels. We got this push. So we got a lot of people interested on going safe into the dollar. And apart from that, yields are bouncing pretty hard. People were freaking out on Monday, and that was an exaggerated and a pretty overstated and oversold territory in both 2-year and the 10-year. So we are bouncing hard of that. There were a lot of levels of support. The inverted yield curve is pulling back pretty hard, but at the end of the day, we are going to see that an inversion hold. So until then, watch the inverted yield curve and watch the small caps, because small caps are basically suffering a lot due to the recession. Not because the interest rates are going to go lower. That is good for them. That is good for those businesses that need loans and need big money. I think the concerning part is that the overall market, it was pretty much hammered down. And even though we are now pushing a little bit, look at this blip, the sell-off was insane on the mid to a small cap. I don't know what to say. Banks are mixed. The earnings are quite red. The only exception is Shopify, which is, I mean, 22%. And then we got semiconductors, which were quite good on the day. Nvidia was racking up hard, gapping up, and it's now, look at this, it's now taking the market down. This was the gap. This was the wick at the middle of the gap, and then we just fill the gap, and we are continuing lower. The 45 EMA in the semiconductor sectors and stocks, it's pretty good to see the trend. We are seeing Nvidia continuously mail down, and we are going to see, look at this, we are right there. If you want to take some setups, this is a good spot. I would watch the lower time frames once we take this sell side liquidity into this 15-minute fair value gap. And if not, I think honestly we are going back down to 18,000. So this level, it's pretty important. If not, we are going to see rejectment of settlement and into the pre-market low. This is what I'm reading, guys. This is following price action. I would really like this setup to work, but we tried, we pushed, and we rejected with volume. So it is what it is. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Thank you for the views. Thank you for the subscribers. I really enjoy doing this. I hope you also enjoy these videos. If you want to see something being included in these videos, put that in the comments down below and I will try to squeeze those in. And remember that discipline, patience, and risk management it's what it's all about. This channel, it's for you to really see my approach to the markets, my overview, my analysis, but do your own diligence and do your own analysis and practice, exercise, patience, and risk management. Those are going to be key for your success. Stay safe, everyone, and see you tomorrow.